All right, we are going to go ahead and get started. Good morning, good afternoon to everybody. Thank you for joining us. Hope you are all having a good week. We are coming to you from the Evolution Hospitality Corporate Office here in San Clemente. We got Gus and John Caparella here and Gina, and we are excited to spend the next hour with you. As is customary, we're going to kick it off with a power of pause, and we would love for Scott Snofsky, the opening GM of the Hyatt Place Hyatt House Complex in Scottsdale, Arizona, to kick us off the right way. Scott?
Thank you, Scott. My camera's not quite working on my computer, so it's off to M7 after this meeting's over, but I wanted to say thanks for the opportunity to give me the chance to do the power of pause. It's really an honor and a privilege. And it's also an honor and a privilege to be one of the EVO Mindful Guides. And just a quick plug for that. It's a real simple opportunity. You meet with Dr. Romy and you get your EVO Wellness on. And my understanding is that it adds about 10 yards to your drive and golf and helps you to reggae a little bit better. I am also told it helps you to grow hair, but that's not confirmed. So if everybody just wants to go ahead and let's get into a relaxing position, just kind of sit back, close your eyes, or focus on a spot on the floor, something that is pleasing to you. Definitely not my frozen picture. But if you want to go ahead and do that and just close your eyes and think about something that makes you happy, a person that you love, close family member, spouse, child, parent, friend, your favorite Kardashian, doesn't matter who it is, somebody that you care about a great deal. And it's 111 degrees here in Scottsdale today. And so if you'll indulge me, we're going to take a quick walk through the forest, right? Someplace that it's not boiling hot. I know a lot of people like to go to the beach, but I don't even want to see the sun today because it's so hot here. And we're just going to go and take a walk. We're relaxed. We've got our eyes closed now. We're thinking of those big pine trees, those evergreens, and you can smell the sap. You can feel the leaves crunching underfoot. It's a nice breeze today. A lot of forest noise, right? Just quiet crunching on your feet. And we're going to go ahead and take a deep breath, breathe in and pause, and out through your nose. And let's go ahead and do that again. And as we do that, think about that person that I asked you to think about, your loved one, walking next to you, and think about what you would talk to them about right now if you had that opportunity. Go ahead and breathe in again. Hold that breath and let it out. And what are they going to say to you? And just think about that. Be in the moment with them in that nice, quiet place. You're taking a calm stroll. Go ahead and breathe in again. 2, 3, and pause and let it out. And as you open your eyes and come back to center and get ready for this meeting, just think about how important that person is in your life, and maybe pick up the phone after the meeting and give them a call, tell them you love them. Probably not the Kardashians, but someone you love.
Very nice, Scott. Thank you so much. I felt like we all got on a plane, went across the border, and visited Murray Lowe up in Whistler, walking through his forest. So thank you so much for that. We have a few company updates to provide for you, but we are very excited to have a special guest with us today. Given that we're going into budget season, we thought that it would be appropriate to bring Dan Lesser onto the call. Dan has 30 years of expertise in hospitality, operational investment, and valuation advisory services. And he was teed up to be a speaker at one of our conferences a few years ago for those that have been with us for a while. and due to inclement weather, got stuck in New York City, and I ended up on the stage trying to deliver his presentation. So we're going to get a much better execution today, and getting to enjoy Dan's expertise as he shares with us his thoughts on the hospitality industry and how we should be thinking about it as we look to begin our 2022 budget process. So Dan, thank you so much for taking the time to join us. It's your show.
Thank you so much for the invite. It's really great to be here. And I appreciate your saying 30 years because it's actually 40, but I, at my age, I like to keep it young. So 30 is fine by me. I do remember when I was supposed to come out and there was a horrible snowstorm and I never did. And I love the opening that just happened. You call that an Evo moment?
An Evo power of pause.
I want to learn more about that. That was great. Thank you for that. So it's great to be here with everybody. And I'm going to, I have a slide deck here that I'm going to go through fairly quickly. If you have any questions, I'm happy to stick around at the end, or my contact information is at the lower left-hand corner. I'm happy to take calls, emails, what have you. So, everybody here is in the hotel business. So you live with a lot of uncertainty in life, right? Because that's sort of the nature, not only of life, but frankly, of the hotel business, right? It's far from a steady business. And I'm a big quote guy. So I resonate with this one, particularly during these times that, uncertainty is the only certainty there is, and knowing how to live with insecurity is the only security. I really resonate with this because I have not lived my entire life like this. It took me a long time to get to this point, but it's great when you get there. Let's just take a quick minute. Everybody knows this, but it sets a good backdrop for my conversation about hotels and what makes them different. Right, unlike an office building or a shopping center or an apartment building, right? Typically, you have long-term tenancies. Many times, they're credit-worthy tenancies, and once a building gets leased up, you're collecting annuity income, if you will. Right, with a hotel, it's completely different. Right, daily leasing, with technology being what it is, the average room rates literally change by the nanosecond. Right, in an up market, that's a beautiful thing. In a down market, it'll kill you, as we experienced during the early days of COVID. With a full service hotel, you're generating revenue from putting heads in beds, but also from food and beverage and recreational activities, maybe retail, right? Those are very different income streams. And then controlling the costs for those very different income streams is very different than controlling the costs for putting heads in beds. So it's a complicated business that is married up with bricks and mortar real estate. And, high leverage costs, high fixed costs. It's really a unique animal in the commercial real estate world. Again, I'd like to reiterate that it's bricks and mortar real estate meshed in with a going business concern. The bottom line is the sector is complex and it's volatile. And as we're going to see in the next couple of slides, and, as I'm sure many of you recall, it wasn't that long ago, the hotel industry was on a tremendous positive upward swing that really didn't appear to have an end to it. There was a lot of concern that it would end. Nobody knew what was going to cause the end. Obviously, now we know. And so we can see on this table on the top part of the slide, I mean, all those green arrows pointing up are the major metrics that the sector looks to. And there was a 10-year run where every single year they went up. I will acknowledge, and I know that there was, concern back in 18 and more specifically in 19, when that growth was declining, but it was growth nonetheless. So you can look at the glass half full, half empty. But obviously we get to 2020 and, absolutely horrific numbers and metrics. And we all know that 2020 became really the worst year on record for US hotels. And it's interesting because, when you look at the decline in revenue per available room, right after COVID became a thing, within the first 30 days, 60 days, Revenue per available room nationally was down upwards of almost 90%, 90. And if you compare and contrast that to the great financial crisis or right after 9/11, revenue per available room, or RevPAR, declined somewhere between 20 and 25%. And when those two events occurred, those were oh my God moments, right? You think about it, we just experienced almost 90% decline in RevPAR, which makes those prior, moments seem like child's play. So everything's sort of relative in life. The sector has bounced back very nicely, but it's still way below pre-COVID numbers. And everybody knows, we hear about it every day, and we see it in the numbers too, right? The recovery is clearly being led by the leisure traveler. Much less so by corporate individual business, although it has clearly picked up from the bottom, if you will. Group meeting, convention-oriented business is still a challenge, even more so than corporate individual business. It's slowly, opening, but obviously there are challenges in the immediate future with the Delta variants, and we're going to talk more about that. And then an even smaller amount of rebound is coming obviously from international travelers, because we're not getting a whole lot of international inbound travelers. So leisure is kind of where it's at. I think there's a lot of pause today. Here we are, August, 25th today? Labor Day is a week away, right? And the general consensus 60 days ago was that, summer was going to be amazing because of the leisure traffic, drive to, et cetera. And come Labor Day, and with large companies, providing mandates that people had to come back to the office, we were just going to get back to, the way it was in terms of corporate, individual business, and group meeting and convention. And now we see that there are, lots of companies that are pushing that return to office date into 2022. And there are some that have now come out and said, just work from home remotely forever if you want. So it's going to be interesting to see whether this change in travel patterns endures, and whether work from home really is a paradigm shift for long-term corporate business travel. I think it is. I think it will be a paradigm shift, and there are going to be positive and negatives associated with that. But that's probably for another discussion. And here we can see these are the latest STR numbers, and national occupancy in 2020 of 41.6%. I mean, that's unprecedented in terms of on the low side. And we can see that revenue per available room 2020 for the year. Now, keep in mind that the first 2.5 months of 2020 were good months from an operational perspective. It was only when COVID really became a thing, call it March 15th, right? So even with 2.5 good months, revenue per available room in 2020 compared with all of 2019 declined over 50%. I mean, these are just astronomical numbers on the negative side. We can see that there's a rebound happening. STR is forecasting 2022 at just under 62%. However, at that point, revenue per available room will still be behind 2019 by more than 10%. Some good news, under construction rooms are declining. There's really not a whole lot of financing out there for that. I will tell you that we are doing a lot of feasibility studies for new construction, but it's new construction that would not come out for 3 to 5 years. But it is good news that construction is definitely under control. There are no shortage of markets where there's a good supply and demand balance currently today. There's also no shortage of markets where the opposite is true, and New York is probably the poster child for that. Again, that's another in-depth conversation that we can do another day. STR and many other prognosticators are talking about 2024, 25 for getting back to 2019, which was an all-time high, and obviously represents pure pre-COVID numbers. The reality is nobody really knows. It's probably as good a guess as anybody can make at this point that 2024, 25 is when it happens. It could end up actually being 2023. Time will tell. So, I'm a big strengths, weaknesses, opportunities, and threats person, and like to think about sort of issues in life in that vein. So let's talk about some of the strengths that we're clearly experiencing within the very recent past. And when I say recent past, I think the market dynamics and the mentality and the thinking really dramatically changed right around March of this year. So listen, occupancy is rebounding. Profitability is coming back. It's on a path to recovery. During the lockdowns, consumers actually were able to save enormous sums of money, and so there's U.S. wealth on a per capita basis has never been higher, and there's money out there for people to spend and travel and have a good time and get back to life as long as they can, as soon as they can. Stock market is at all-time highs just within the past couple of weeks. And then capital availability in terms of equity and debt. There's an enormous amount of capital that has been raised and earmarked for investment in the lodging sector. And we're going to talk about some more of that going forward. There have been some very, the transaction activity has been increasing dramatically. In the second quarter of 2020, there was hardly any transaction activity. Q3, which is now 2021, we're back probably at about 50% of activity pre-COVID, but it's increasing every day that we speak. And not only that, there's a lot of smart, sophisticated money investing big dollars. Okay, so there have been in the United States since 2016, 6 hotel trades in America at $2 million per unit or more. 6 in total, ever. In this year, 2021, there have been 2 trades, the Montage in Healdsburg and Ventana Canyon in California as well. So if you think about it, 2 trades compared to 6 in total, that's a third, right? $1 million per unit trades. The first one that ever occurred, I want to say, was 2004, the Mayflower Hotel in New York. And since then, there have been, I believe, a total of 30 trades in the United States of hotels $1 million a room or more. And this year in 2021, there have been 3 such trades. So again, that ratio is 10%. So I think it's very much a positive reflection on smart, sophisticated money and how they see the space. Taking this concept a little bit further, asset sale prices, these are individual assets, $100 million or more, right? And all of these have occurred just this year. Keep in mind that 18 months ago, the transaction market was frozen solid. There was hardly any trades occurring. Here are 2 trades that have occurred this year. Single asset deals over $600 million. Doesn't happen very often. And on the bottom, we can see, no shortage of trades, single asset deals, $200 million or more. This is an interesting transaction, a $6 billion transaction. You look at the buyer and the seller profiles. These are smart, sophisticated entities. Las Vegas Sands Corp is a publicly traded company. Again, speaks volumes about investor perception on the upside for a market like Las Vegas, which we know really took it on the chin. And this is another significant transaction that's occurred this year. It's a sale leaseback. Blackstone, MGM, again, very smart, sophisticated folks, throwing around a fair amount of money. And I think it's very much a positive reflection on what the long-term outlook is. Right, we don't know how long this challenge is going to occur with the Delta variant, and let's face it, there are always challenges coming up. We're in some acute pain now, but long term, smart money sees a positive ramp up for the lodging space, and they're frankly betting on it. And Blackstone and Starwood purchased Extended Stay America this year for $6 billion. Hyatt just a week or two ago announced they were purchasing or closed on the acquisition of Apple Leisure Group for almost $3 billion. Again, a lot of smart money getting invested in the space. I think we may have talked earlier about hotel supply. It's below room night demand growth. And it probably will remain that way for quite some time because of not a whole lot of financing out there. There is some for compelling stories, and then building labor shortages. Opportunities in the space, we are in somewhat of an inflationary environment. There are some who are saying that that it's peaked, the current inflation burst. There are others who don't believe it has. I'm not an economist, so I don't have an opinion either way. But what I do know is that because hotels lease guest rooms every single night, and as we said earlier, the pricing of those units literally changes by the nanosecond. And I said earlier, in an upmarket, that's a beautiful thing. Well, in an inflationary environment, hotels are a terrific investment hedge against inflation. And I can tell you that a lot of the smart money out there, that's part of their investment thesis, that inflation is going to continue to rise and will be with us for a while. Again, keep in mind, there's a whole school of thought that it's peaked already and it will not be with us, and time will tell. Hilton announcing that they're doing away with daily housekeeping for most U.S. hotels. MCR recently was talked about in an article in the Wall Street Journal about how Tyler Morse is trying out a model to the a la carte model, if you will, sort of like the airlines do, right? It's actually something that I had proposed a number of years ago, and I think a few people thought I was crazy. I got feedback. We're in a service business, and we are. There's no question about it. But if you think about it, so are the airlines. But the airlines apparently don't really care much about service, and so they've been very successful at offering a la carte pricing. It'll be interesting to see whether the hotel business does the same. Weaknesses, these are all headlines from within the past 30 days. I want to say actually maybe even 15 days, right? These are some ominous headlines that, there's no question about it. This is not conspiracy theory stuff. This is really happening. So, something to consider, or many things to consider, I should say. Other weaknesses, labor shortages, we all know about that. It doesn't seem like that's going away anytime soon. It also is not just generic to the lodging industry. It's frankly every business and industry out there is suffering from labor shortages, and thus rising costs for labor as well. Property insurance rates only go one way. Tax burdens, it is interesting. As income has declined, many investors and owners believe that there's an opportunity to reduce their real estate tax burdens. And that's frankly a false notion, because yes, with declining income, you may very well be able to justify declining assessed value, right? And every property is going to challenge their taxes to get lower assessed values, and probably will be successful at achieving that. However, if you think about it, most municipalities in America are broke or fairly close to not having a whole lot of money. And so how do real estate taxes get calculated? Municipalities total up the assessed value for a jurisdiction. They have a budget that they need to meet, and they back into what the tax rate will be. So at the end of the day, tax burdens, I do not believe, are going down anytime soon. I think they're only going up, although tax assessments might be declining. More hotel brands. This is a theme that I've talked about for many, many years. It continues to, frankly, blow me away that the major hotel brand families continue to come out with new brands. Now, that has slowed down, but these 4 brands have been rolled out since the beginning of COVID. And I I humbly think there's enough brands out there, but again, that's another topic for another day. Threats. This sort of goes along the weakness category as well, right? These are real threats. I came across this thing about electromagnetic pulse attacks. The United States Air Force is guarding against them, right? This is not conspiracy theory stuff. It's there. If you would have told somebody on 9/11 that jumbo planes were going to fly into the World Trade Center, they would have thought you're nuts, and yet it happened, right? Frankly, I think if you told somebody today that that was still possible, they'd probably say you're nuts. It's happened, right? So there are threats out there. And again, because of the sensitivity in the hotel space, on the downside, right? Right after 9/11, the hotel industry shut down. Right after COVID, the hotel industry shut down. And that again is the nature of daily leasing and constant changing of room rates. It's important to keep everything in perspective. This is a headline from Hotel Management just a week or so ago. Hotel sector posts record performance gains in Q2, which is true, right? And that sounds like just an amazing headline. And it is good news, don't get me wrong. But if you read down at the bottom, in the article and the body of the article, they talk about how the metrics are still way below pre-COVID levels. So just something to sort of, keep in mind. As I look back on my life, there have been several occasions where events have happened in the world, in America, that have been, oh my God, moments, and sort of feeling like the world was coming to an end. COVID, when we first got into it, was a similar type of event. The purpose and intent of this slide is just to kind of pause for a minute and take a look back over, a 50-year horizon and, recognize that, oh my God, moments happen in life, right? But in the end, humanity is not looking to mutually self-destruct. And we always seem to, get past these oh my God moments, and every time we come out of it, at least in the hotel space, we end up bigger and frankly better. A couple of random thoughts to just sort of wrap this up. There's no doubt about it. After leisure patronage winds down or slows down, if you will, post Labor Day, the balance of this year is going to be challenged in terms of room night demand. We talked about business and convention, and in addition to the Delta variant and any other potential variants that come down the pike, supply chain issues are obviously a huge issue. Labor, we talked about. I'm actually involved in a couple of hotels where during the summertime, we and I'm sure you've experienced this too. There was enough demand in a particular market to make available 100% of the room inventory, but we didn't have enough folks to clean rooms. And general managers and sales folks, and everybody was pitching in and doing it, but we still couldn't get them all done in a quality manner and timely manner. And so if you think about it, we couldn't release all the available rooms. That's lost income right out, and I'm sure many of you have experienced that as well. Forbearance periods from lenders are coming to an end. The lending community has played very nicely in the sandbox up until now. Now that the industry is on an upswing, lenders are going to get impatient, and we're going to see some action in terms of bankruptcies and taking assets back. The notion is that the worst is behind us, and that assets that will be taken back by lenders will not necessarily be making money, but they won't be bleeding enormous sums either. Lots of reasons for optimism. At some point, nobody knows when, this coronavirus contagion will be in the rearview mirror. And we see proof just by, the summer season that as the pandemic finally wanes, there are seeds for growth that are well planted that line up for a terrific rebound in US and global economic growth, which is a beautiful thing for lodging demand. Lack of construction financing, we talked about that. Billions of dollars have been raised to deploy debt and equity into the U.S. lodging sector. I've been doing what I do for over 40 years. I don't recall a time where there's been as much capital from all parts of the world and domestically for targeted for all parts of the lodging sector and all parts of a capital stack in a transaction: debt, equity, mezzanine financing. It's just remarkable. And so, you know, there have been some distressed deals that came to market. There will be more that come to market. But because of all the capital that is out there, debt and equity, it creates velocity in pricing, because compelling opportunities, investment opportunities, end up invariably getting bid up because there's so much capital chasing too few deals. So it is very interesting that we've seen a dramatic rebound in hotel values, but it has not been corresponding to increases in bottom line profits, somewhat bottom line profits, but a large part because of all this capital competing for compelling investment opportunities. So as I said in the beginning, I'm a big sayings guy. This is one of my favorite, from Winston Churchill: if you're going through hell, keep going. And, you know, when we do get past the hell, things can only get better. So I want to thank you for taking the time to listen to me. I hope I didn't go over my time. I hope it didn't bore anybody. And I'm happy to take questions now, later, whenever. And, you know, I just want to thank my friends at Evolution again for inviting me to speak to you folks.
Dan, thank you so much. Very insightful. We appreciate that. And it's a good tee up for everybody to be thinking about all the things that you brought up as we go into the 2022 budget cycle. So thank you so much for your time. If there are questions, you can throw them in the chat box. Otherwise, you know, we certainly can make Dan's contact information available and allow you to reach out if you wanted a specific follow-up. So Dan, thank you.